Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES continued to balance near the all-time high, and at this point, heading into the open, it's really going to be about whether the ES actually manages to break out above 26 quarter, or if we've actually seen the rejection and failure at that point, and now ES can pull back towards the 15 quarter naked VPOC, the 13 to 14 support, and the 09 to 11 support zone. So right off the open, keep an eye on the 19 to 20 pre-market support. That's an area that can be used as a very short-term gauge of which side is in control. As long as ES is holding above 19 to 20, the buy side is dominant, and we can head back up to 24 quarter, 26 quarter, and potentially make a new high. We are still in a very low volume, low volatility environment, so the opportunity potential continues to be low. And for that reason, we should continue to be very selective on the trades we take. And that might mean only one trade a day or even zero trades, depending on how the market sets up off the open. But right now, it really is the time to preserve capital until the volume picks up and volatility picks up. We have a very light econ calendar, really nothing of note on the econ calendar today. Tomorrow, we have a few reports. So there aren't really a whole lot of expectations for today. If anything, I think on the downside, if we break 19 to 20, there's some potential for acceleration into 15 quarter, 13 to 14, and possibly 09 to 11. But if we continue to hold the 19 to 20 zone and start heading higher, we can certainly push to a new all-time high, but it's probably not going to attract a lot of aggressive buying, and we're probably not going to see a whole lot of momentum behind that move, just given the light volume and lack of economic catalyst today to really drive the market big to the upside. So even though we can make a new high and possibly even go up to 31 to 33, I think that the character of that move is probably not going to be something where it does it in a fast pace. We've seen over the last couple of days that the pace of the market has been very slow, and even though the market may go from point A to point B, let's say a 5 or 6 point move, it can take a while for that move to actually materialize. And unless you're getting in from a very good spot and you have good trade location, it's difficult to manage and hold that trade. So again, we have to be very selective on the trades we take. It's really not worth chasing in this environment, right? If you've missed the start of the move, or if you can't get in near the start of the move, then it's probably a good idea just to wait for the next setup rather than getting involved at a very high price or very aggressive price, one way or the other, up or down, and then having to sit through a lot of chop to finally, get the market to your target. Keep an eye on the NYC tick. If we start seeing some better momentum, that could change the environment a little bit, and a better trade could set up. But if the momentum is very two-sided or overall very muted, the volume is light, then the expectation is going to be for low reward potential on any given trade, and for that reason, we're just going to be very selective. And again, if that means no trades, that's perfectly fine. Just understand the environment you're in and adapt your execution to match the pace of the market environment that you're trading. Be selective now, save your ammo, and then press once the volume and volatility picks up again. So that's the plan for today. Let's see if the buy side can maintain control above 19 to 20 and shoot for that retest of 26 quarter, and we'll take it from there.